What is going on, ladies and gentlemen? Welcome back to another video on the channel. Now today I have a very special video where I'm going to be sharing with you this very nice gold trade that I took that managed to grow my account from a balance of $8 to a balance of $60, as you can see on the screen right there. Now this is a trade that I took using a very simple technique, something that you can replicate, and it works with gold, currencies, and even volatility indices. So I use this technique all the time to grow and flip small accounts, something that may be very useful, something that may be of help to you if you have a small account or even a bigger account. So sit back and relax as I break and analyze this trade for you. And for those who will stick to the end of the video, I'll be revealing 4 powerful confluences that I used in this trade, something that will help you, something that will get you to really nail it in these markets. So consider that as a bonus for those who will stay to the end. But before anything, make sure you hit that like button, subscribe to the channel, and share this video to anyone or someone who might need this kind of knowledge. Without further ado, let's get right into it. And by the way, this is a breakdown of a trade that I actually took, so it's not a game. If you concentrate, you might actually come out with very good knowledge right here. So as you can see, I converted my charts into line charts. As you can see right here, I use line charts all the time because they help me see exactly or very clearly what's actually happening in the market. And as you can see, I saw that the market, focusing on the current price action, I saw that the market was making a series of lower highs and lower lows, as you can see right there. Now, because I was trading gold, I started my analysis on the 4-hour time frame because I was actually aiming to take a short trade. I don't really feel comfortable holding gold trade, so this was a short trade. It made more sense for me to begin my analysis on the 4-hour time frame. On the 4-hour line charts, I saw that gold had broken a recent lower low, and it was actually making a retracement move back to the upside. And someone might ask, how is this a break of structure? Or well, maybe just to explain, sometimes I don't consider wicks, especially with gold. I only consider full body candle closes. So now, knowing in my mind that now gold is on a retracement move, I started looking for possible areas or points where price might reject and resume its trend. Right there, I noticed 2 areas. I noticed an imbalance and an order block that actually price didn't get to tap. So I converted my charts back to the line charts, and I took out my Fibonacci tool to mark out my golden Fibonacci zone, which is actually from a 70 point to an 84 point. So I marked out my area of interest, which is the 70 to the 84 point, which is where price, most of the time when price is making a retracement, always turn at those points, especially from the 70 to the 84 point. So after I marked my area of interest, I went further to see like what the reaction was, how price behaved on that Fibonacci point, on that Fibonacci golden zone. As you can see, you will notice right on the Fibonacci golden zone, there is actually an order block where price didn't tap, but also there is an imbalance, which is where price reacted from. So I had to go back to the go down to the 1-hour time frame and study that as well. So it was quite interesting to find out that right in our Fibonacci gold zone, which is where our imbalance is, price had wicked out to sweep liquidity and rejected that zone immediately. Not enough sign to jump into a trade right away, but that was an indication, a clear indication that gold was now getting ready to fall. Gold was now getting ready to reject that zone and actually fall, which in other words we could say bears were getting ready to take over. And this is where the market was at when I took my trade. And I took my trade after noticing three things. First of all, market had filled out the imbalance gap. It had rejected my Fibonacci gold zone, and also it had swept liquidity. But on top of that, the market printed out the evening star candlestick pattern, which is what gave me the confidence to enter this trade. Next, I needed to know my exit points, which is what you can see I marked right there, those lows where price had actually wicked out, which signifies a place where bulls are very strong. So since this is gold, I didn't want to like hold my trades and hope that my trade will fall further. But as you can see, I saw that that was a potential 160 pips trade, which is quite a lot, and it's enough because with currencies that can take you 2 to 3 days to get that kind of pips, depending on what we're trading. But with gold, as you can see, that was just a few hours. So if you're still around, congratulations, because I'm about to share with you those other confluences that I used to take this trade, uh, like I promised at the beginning of the video. Because with the confluences that I mentioned during the analysis, there are also four other things that I looked at, which actually solidified my confidence to take this trade. But just before we get to that juicy part, I would like to show you this live video of me actually trading this setup, so that you know that this is not some kind of very good story. I actually took this trade, and in this video you will actually see that I'm actually taking profit. I'm actually taking profit from this trade. So this is not some story. This stuff actually works. If anything, you're actually seeing that there's a live trade running right there, and I'm actually taking those profits right there, as you can see. All right, so as promised, here are the other four or three things that I looked at before I took this trade. Number one was a stochastic divergence on the 4-hour time frame. So I saw that price on the charts was making lower highs and lower lows, but on the stochastic, it was making higher highs and higher lows. So that was a hidden divergence, and that was a sign that price was actually going to continue dropping further down. Number two was a rejection of the 200 EMA on the 1-hour time frame. So once I saw that price was had rejected the 200 EMA and had actually closed below the 200 EMA, combined with other factors, I was more confident that price was going to drop. Number three was the TDI divergence on the 1-hour time frame. So once I saw the divergence, much like on the stochastic on the 1 hour, I that was indication for me that price was going to drop. But number 4 also, there was a shark fin, so the band got out. I mean the TDI got out of the band and at the top, and that was indication that price was going to drop. Now for the TDI indicator, that is something that is a whole new subject. If you want to know more about TDI indicators, you can Google or search YouTube and you'll find more information on that. But number 4 was a shark fin on the TDI indicator. Alright, so that's it for this video. Please like, share and subscribe. Otherwise, I'll see you on the next video. Have a good one.